Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. It's actually going to be take two, as during my previous recording all of a sudden someone had to ring the doorbell. But let's get started on the news. Well, there's not a lot of news when it comes to the development of EVE Online over the course of the last week, which is actually, I think, kind of normal. We are just after the holidays and CCP announced their roadmap for 2023 with 2 expansions, and then of course in Q1 here we've got, I think, more storyline stuff as well, but of course the home front system for doing stuff for faction warfare in HiSec, and then the allegiance system that got another name, but basically that should allow everyone to take part in faction warfare. I can imagine that that takes a decent amount of development time, but I am personally eagerly awaiting any information. And whoa man, the graphics here look kind of weird, but all right, let's keep going. On the development on the news front, not that much. CCP did drop the economic numbers for the month here as well, which I've only quickly browsed through and took a look at the forum responses. So a little bit of worry on ISK inflation, definitely high ISK velocity, so a lot of trading happening, I believe. And then we'll have to see, of course, on destruction if things keep staying at decently high levels in LowSec as well. I think we could get a new infusion of action with that potential allegiance system on the horizon. But overall, I would say that my read on the picture is that the economy is actually doing pretty well with a decent amount of destruction and production at the moment. We also want to take a quick look at the new Eden store, because here we have a sale happening for skill extractors, and that is in part at least responsible for what we're seeing coming up next. Plex shooting up to well above 5 million, a very large percentage jump. So if we go to the services, we can see that skill extractors, at least the 5x and the 10x packages, are on sale here. So that means that we get to dive straight into the market with those pilot services, and yeah, that's where I got on the previous recording, but that's at 2:30. So let's get going, and of course we will start with those plex as well. Here is the chart, and you can see we jump with higher volumes in the last couple of days to a price above 5 million ISK. That is of course because a large volume of plex will have been exchanged for extractors in order to then sell those at potentially higher margins. So plex are currently selling at 5.25 million, buyers at almost 5.1 million. Very narrow margin. This does show that despite very high prices for plex, we have a strong demand for them. The next item are the multiple pilot trade certificates that I think are sort of under the influence of what's happening there as well, going to high price. You can see those daily averages definitely at the high end of the trade range. Volumes are still very, very low, but we are coming into the 2 billion range as well for the trading certificates, almost 2 billion for the sellers and above 1.8 billion for the buyers as well. And then we have those skill extractors that, well, do an opposite move to what's happening with plex. You can see on both of them the volumes are up significantly, but for plex going up in price and the skill extractors going down in price quite a lot to a price point below 400 million ISK. We're talking 377 million for the sellers and 370 million for the buyers. So this is potentially a jumping point for investors. Try to grab those cheap skill extractors and then sell them later down the line for a better price is a definite possibility, which is of course also why a lot of this is trading places. People that want to unload some very expensive plex and then get the cash, etc. There's a lot of position taking that is happening at the moment in the skill extractor market, in the plex market, and thus actually also in the ISK market itself. Impact on the injectors. Here are the large scale injectors that are also going down in price with higher volumes as well. So yeah, cheaper extractors should mean easier margins for the large scale injectors, so those have a little bit of pressure. Still 897 million, I would say, still very expensive for a large scale injector. 837 million for the buyers, bit of margin that opens up here as well. The small scale injectors are also going down in price, but you can clearly tell that here we just basically have a slight correction that is not all too structural. Over the last couple of days, volumes have also stayed a little bit more quiet. 185 million for the sellers, 168 for the buyers, and I'm actually in the camp of the small scale injectors being the smartest of these markets, because I think all of this will be absorbed and very quickly, and that these markets, right, skill extractors will go back to above 500 million in not that much time. And plex, well, plex I think will start moving with inflation expectation and with potential hype expectations as well. Of course, with 2 expansion on the horizon, I think plex could actually have a very strong start of the year. We'll see if I'm right or wrong on that. And that would mean that skill extractors, in my opinion, can very quickly recover and then start an upward trajectory that had started at the start of January as well. Next up, we've got the daily alpha injectors that are still surprisingly stable for practically 2 months here. A price within the 40 to 50 million range. We are talking 48 for the sellers and 43.5 for the buyers. A little bit of a warning though, if we stretch this out a little bit, you can start to see those max prices shooting up towards a higher price point, and that could have some momentum again on that, my personal inflation expectation in general. Finally, we've got the hypercores, which is one of the reasons why we can potentially, in my opinion, expect inflation, because if we take a look here, volumes are pretty high and we are trading currently at 580,000 for the sellers, 510 for the buyers, so definitely very expensive, and also a bit of an impact probably from what just happened with plex, but I think in general the market is also readying itself for a lot of risk to make its way into the game. CCP in fact I think did mention that they want to reward players enough to keep everything going as well. Next up, we have the mineral market coming in at 7 minutes. There we go. So on this one, let's start with titanium and the good news for high-sec miners. As we can see, we are back above 4.5 ISK on average, 464 for the sellers, 427 for the buyers. We do have 2 billion units that are waiting at 470 that are probably going to keep us in check a little bit more. But let's be honest, after that we get a rather strange series of 10 million here. But overall, the total volume of this I think will be somewhat reasonable, couple 100 million units, not super high billions of units. And we got another half a billion waiting at 490, but I think here, if we can maintain our momentum with destruction and with demand, so production, maybe a little bit of an arms race, a couple of rumblings I've seen on Reddit as well when it comes to potential deployments in nullsec, I think we could be looking at a strong market for titanium looking forward. And another thing that I would add on this one is that I'm still every single day doing the Paragon missions as well for those points for alliance logos and corporation logos. I think I'm not the only player that's doing that. In total, that's probably a pretty significant sink for stuff. Which well, is also going to, I think, help keep demand flowing for stuff, which also of course starts with mining some titanium, mining some pyrite, mining some minerals in general. So it's probably going to add to, in my opinion, a stronger demand and a slightly higher prices than without that sink. So looking pretty good for titanium. Unfortunately, if we then go for pyrite, when we are continuing our very slow downtrend towards 10 ISK, sellers at the moment 1029, buyers 1011. So buyers are still above 10 ISK, but this is, in my opinion, the real battle and the metric to keep an eye on, because if we go below 10 ISK here for pyrite, that would be very bad news across the board, I think, because it would mean that there is less demand and that some mineral markets are willing to go to completely different and lower ranges. But if we can bounce back from that 10 ISK, if you know, those that want cheaper minerals can't break that 10 barrier, then there is a good chance, I think, that we'll make a bounce from that and that we are looking at least this range for the foreseeable future. Mexalon is actually doing a very similar thing, but with 60 ISK. So if we go here, you can see that slow and agonizing down downtrend as well. We are talking 63.50 for the sellers, 60.65 for the buyers. So that 60 ISK is very important. If you see Mexelon go below 60 ISK, then we've got potentially a problem. But as long as we can bounce back from here, if we can basically make this a slow burn to a low point and then maybe a slow burn back up, maybe something happens that pushes us back up a little bit more violently, then we are, I think, looking pretty good for high-sec miners, and it's a sign that stuff is happening in the game in general. Moving on to low-sec, we've got Isogen. That definitely gives me hope that despite the CCP intervention, we are back above 500 ISK and we are staying here. 545 for the sellers, 521 for the buyers. So strong demand is clearly here, even at 1-year high prices. And then we've got the mixed picture yet again. So I'm really not sure which way we're going, because here is the Noxium chart. While we made a decently good 6-month high point at 1,100 ISK, we are back at 1,000. And then the bad news, sellers are at 997, buyers at 961. Still a narrow margin, so I would say there is definitely still strong demand, but very clearly here sellers are giving up on 1,000 ISK and they're willing to move to that lower range. Smart buyers will then just have a little bit of patience, push that to a 950, and you get a completely different range for Noxium, showing that maybe here stuff is not going full throttle anymore. So it's going to be really interesting to see how that evolves. Next here is Zydrine. Now this is in part, I think, due to the CCP intervention, making more supplies available. Healthy correction, I would say, to 2,300 for the sellers, 2,300 for the buyers as well though, so strong demand is clearly still a thing here. Oh, and I should really open this one up as well, just to show you what's happening within JITA, and everything here is, well, a little bit more aggressive, but definitely also jumps quite a ways out. And then finally we've got Megasite. That's also giving back a little bit of ground, but definitely more carefully than Zydrine at 2,600 for the sellers and 2,600 for the buyers as well. We have that narrow margin, we have that strong demand, and we have an old historic situation that has basically been fully recovered, with Megasite being the most expensive Tech 1 mineral, and then moving down the line it's Zydrine, Noxium, Isogen, and then we get Mexelon, Pyrite and Tritanium. So everything is back to the way I've known EVE Online when I first started, when it comes to the price ranges for all of these minerals. And I think that we are in this situation because things are more healthy after all the trials and tribulation with, well, too much stuff, then too little stuff. We need time to get through all of the reserves, and here I think we are starting to get into that place where, as long as CCP can keep the hype up, as long as there is enough activity, stuff happening in the game, I think that we can stay in this relatively healthy mineral market, in my opinion. Finally, we've got Morphite tied to Tech 2, that is back above 40,000 ISK. We are talking 42,000 almost for the sellers and 40,000 for the buyers. So it's still quite reasonable, basically pretty much on the average for the year, maybe even slightly below that. Next up, we have the PI market. That's coming in at 1325. So for the PI market, my personal theory on all of this is that we have to be very careful. While the party is in full swing, the hype is really high. You've probably seen that in the last couple of weeks. We know now that CCP has been willing to intervene into minerals, very specifically mentioning we want to solve some mineral bottlenecks, and they've also intervened in advanced moon materials, nerfing output to create value. So I would personally not be surprised if eventually CCP comes out on the PI front as well. What form that could take is very difficult to say, but you know, during the last couple of years, CCP has very clearly said that what they want to do is they want to give value to flying out in space, to doing stuff into the game, and PI is one of the most passive ways to create stuff in EVE Online. And despite that, if we get started, here are the broadcast notes. We are at 1 year high points, and even historically 2.25 million for the sellers, 2.1 million pretty much for the buyers. Very narrow margin, very expensive prices. So this is, you know, the new, in my opinion, here and there bottleneck for production. Next we've got construction blocks. Might be giving some players a little bit of hope, of course, because we are coming down from a 1 year high point or very close to that. But yeah, the bad news, I was going through this one before as well. We are still at 10,000 discs for the sellers, 9.6 for the buyers. That is still that historical normal price, and the margin is very low. So it does show that we've got very strong demand. Get through a little bit of volume and you can easily push prices back to an average above 10,000 discs. Coolants, same spots, coming down from 11,000 discs for a couple of weeks. So this looks like a correction, and are the good times over? Well, sellers are still well above 10,000 discs, and buyers are willing to pony up very close to 10,000 discs as well. So this is clearly not, in my opinion, the start of a real decline and prices going back to 8,000, 6,000, stuff like that. That's not happening anytime soon, I think. Then we get our enriched uranium also giving back some ground, but again, 15,000, 1 year high point. You know, that does tend to attract some attention. We're at 11,300 to 11,200 for the buyers. So very, very good price. I would still put this at like a normal average to slightly above average price, even historically speaking, with a margin of 80 ISK, which is crazy low, showing that very high demand for all of this PI. Integrity response drones then definitely at the highest range for the entire year. Here is the Siege Green update, right, making Dreadnought production more attractive. Then we get the expansion here, not an immediate response, but again, then we get the mineral changes and the new bottlenecks, I think, potentially showing up here. 2.65 million to 2.8 million for most sellers, 2.5 million for the buyers. So buyers above 2.5 million for integrity response drones. Definitely feels pretty expensive. Next we've got our mechanical parts, also again 1 year high point December and early January, so we're coming back down a little bit from that, but 11,150 to 10,250 is very expensive. Our miniature electronics, same story, so doing really well here already, 12,500. And then here I think bottlenecks again starting to show up, 15k, and that's on a downwards week. 15,600 for the sellers, 14,600 for the buyers. You know, refined PI material as well, definitely relatively easy to produce without too much activity. Then we get our nano factories. These ones did have to give back the 1 million range, sellers coming in at still above 1 million. All right, when I checked it just probably half an hour ago, they were below 1 million, and buyers coming in at 872, a bit more margin here. So that one not able to maintain all the gains. Different here for organic mortar applicators though. Sellers also above 1 million, but buyers forced up above 900,000 as well. So these buyers are now at the highest range for the rest of the year that organic mortar applicators have. This is basically capitulation on the other side, right? What I'm a little bit fearing for pyrite, right? Where sellers capitulate, go below 10, buyers get room and we can move to a lower range. Basically the exact opposite happens here, where buyers are forced above the previous sell ranges, and there's not much they can do about that in this current market. Recursive computing module just recovering from a 1 year high point as well, 1.4 million to 1.3 million. Our robotics then, I would have hoped, or I was really looking forward to the point where robotics would be 100k. That never fully materialized, but if you then look at this full 1 year chart, you can clearly see the change, and especially late in the year. So this to me comes as, if I look back at all of this, as a real surprise, because we just come from a period where PI was so cheap, so ubiquitous, oversupplied across the board, that this felt like a strong summer. 80k, 75k for robotics. I was like, this is a great summer, this is crazy. And then fall was like, man, we're building up a little bit more, we're reaching 80k for robotics, and now this winter is like, this is nuts, this is really, really a great price. 92,500, 91,000 for the buyers. And so I sold a little bit early, I will admit that. Volumes are peaking yet again here at this point, so there's a lot of demand for PI out there. Rocket fuel, 1 year high point here as well, 14,700, so almost 15,000 discs for refined PI material, 13,600 for the buyers, a bit more margin, but still only 1,000 discs, so this is not completely crazy or demand that's cratering despite these high prices. Self-harmonizing power cores also giving back a little bit of ground, but still last couple of months very, very expensive, 2.2 to 2.1 million. Our smart fab units, I think this one was a little bit different if we look at the current prices, because sellers are at 88,000, but buyers are coming in at 55,000, except in the perimeter Tranquility Tower where someone made a mistake in the range, but that's okay. 88,000 to 55,000 is of course a huge margin, so someone has to win out here. At the moment it's the sellers. You see the daily averages clearly at the high end of the range, but things could change on just a little bit of supply. So those that don't have the consistent volumes that some of the others have, they can be more risky markets. But if we keep up with the list, here are sterile conduits, just coming from a 2 million one-year high point as well, and settling again at that highest range, 1.4 to 1.3 million here. Next we've got our supercomputers, slowly edging. So this, despite the lower volumes here, we get better volumes, but it's quite spiky. We are reaching 100,000 for the sellers, 94,000 for the buyers, and what a sight. We've got 3, 6, 8 sell orders in JIDA itself. Do we have anyone selling in the Tranquility Training Tower? No. This is another, to me, another sign that the next phase the next problem could be bottlenecks in PI production. Then we've got our synthetic oil, another one-year high point, jumping up to 13,000 almost. Well, no, actually it's 14,000 for the sellers, 12,840 here for the buyers. So this is actually an overflow of sellers where there was a buyer at 12,850. There just were not enough buyers, so this became a sell order. But clearly, again, an opportunity to sell at one-year high points, and I sold too soon. Our synthetic synapses are, well, one-year high point yet again, 120 to 125,000 for the sellers, 114 for the buyers. So the buyers are now coming in at this range up here. If you look back for the full year, I don't think that they will like that too much. Transcranial microcontrollers, 100,000 as well to 93,000. Water-cooled CPU, again, that little bit of a warning, so you can clearly see while the volumes have picked up, the volumes before all of this were very inconsistent, and so you can get these sharp drop-offs. We were almost at 10,000 discs, and now sellers coming in at 7.8, buyers at 7.6, so that is like definitely a pretty sharp drop-off, but this tends to happen in the PI markets where volumes have been a little bit less consistent. And then our wetware mainframes, advanced boom PI materials, clearly having some very high prices at the moment, 2.6 million to 2.6 million as well. So despite basically one-year high prices, buyers are just, we gotta match this, we gotta go up to these price ranges as well. So the PI market is very, very expensive at the moment. Couple of signs here and there that there may be a little bit of exhaustion or maybe more supply coming online, although it's actually the volumes coming down. But across the board we are very, very expensive, well above average. But I would again warn that keep in mind, CCP has already intervened here, has intervened here. This one, in my opinion, might just be next. We will see, of course, if I am right or wrong on that one. Let's move on to advanced move materials at 2340. There we go. And I think this is pretty much where I got until they bothered me in the first recording. So let's get started. Crystalline carbonides shooting up to a one-year high point here. Now I've gone through a couple more of these, so this is not a trend, but look at this, 180 for a couple of sellers, 200 discs for most other sellers, and then 166 for the buyers. So they're opening up a bit of margin here, but this is clearly not the oversupplied crystalline carbonite anymore either. And what I potentially see in this is basically a bit of cartel formation. It could be a trader, it could be Nasdaq groups that are actually controlling the sources of crystalline carbonite, saying, well, we're coming in with bigger volumes, right? 25 million on 20 plus million on quite a few of these sell orders, but we are going to try to dictate a price, and that to me is very reminiscent of what we've seen happen, for instance, in Megasite and in Zydrine as well. Now, to give a little bit of context into all of this, it's definitely not in the entire market that this is happening, because if we go for Caldari, here is titanium carbide, shot up to a 1-year high point, but then volumes come in to take advantage of these prices, and we're actually to just a yearly average at this point, 137 to 134. For Minmatar, it is plasmonic metamaterials. Same story, well, same story. We're basically at a yearly average away from the bottom, but not yet peaking to 1-year high points. 12,700 for the sellers, 10,900 for the buyers. And then we get terahertz metamaterials. That's almost recovering as well, but not quite yet, 13,400 to 13,200. So the margin is very narrow. I think buyers are seeing the writing on the wall, and my theory as well is that, number one, it takes a little bit of time. You clearly see that the cheapest items are fully recovering first and then are potentially even being manipulated, but it will take a little bit of time for all of this to go through the supply chains into the more expensive ones, such as these metamaterials. I think patience for the more expensive ones is still the order of the day, but for the cheap stuff, for the carbide stuff, well, an opportunity like this, I wouldn't pass it up. If I have any, I would be trying to sell, and I think 179, it'll be gone almost immediately, especially if someone is trying to manipulate the market. If you don't have too big volumes, they'll just snag it up to try and set the new price range. So that's interesting. Let's see what happens with the other ones. Here are the fermionic condensates, also peaked up and almost fully recovered, but now has to give back a little bit more ground. 14,500 to 37,000, not even that narrow a margin either. Then we've got ferrogel, and it is a 40k item, so again more expensive, so I think it'll just take a little bit of time. Ferrogel is also quite expensive, 22,500 to 22,000, doing back on the average basically. Fullerides though, 700 disc, full recovery, back to 700 disc right now. We're talking, well, the number of the devil, 666 is, well, it's actually 67 here if you round this up, and then 625 for the buyer. So narrow margin here, back at those old prices. And why? I think this is just closer to what's being mined from moons. That's been nerfed by 25%, and so here they have to go up in price in order to just keep those margins, or because of the supply problems or changes that have been created here. Our hypersynaptic fibers, 10x basically on the average price, so here we don't have a full recovery to 10k just yet, but 6.3 to 6.1 is definitely away from the bottom prices. That was 3,750 on a couple of occasions. So that is, I think, the story in the advanced materials. Let's keep going through the list and see if there's anything else that jumps out. Well, nanotransistors made that full recovery, but again, not close enough to the source. I think there is enough basically extra out there that the suppliers are coming in to take advantage of this price, and then they're willing to go back down to 3,000. So that's all of this stuff right here, coming in now at 3,000 to the sellers, 2.8 for the buyers. Actually a bit more margin than what I expected. Phenolic composites then actually reached a 1-year high point. It is also a cheaper item, but unfortunately a little bit too much too quickly, as we got again supplies that are bringing the price back down, 1,300 to 1,300. So this is more the narrow margin that you would expect for something that's a little bit more stretched by the new supply situation. Pressurized oxidizers then, full recovery. I think the story here, it's a newer item, so we don't have 2 decades of activity potentially where reserves can have been built and traders can have positions, etc. So as a result, this, despite being 13,700 disc, has already fully recovered. And then the reinforced carbon fiber, which someone mentioned in the comments, is also one of those newer items. Also basically a full recovery as well to 12,500. Then we got our ceramic fibers, cheaper one. So this one responded before the change, actually did almost a full recovery and is now currently at this higher price range, 320 to 313. I think players that bought in at 200 are very happy with that as well. So for advanced boom materials, I would say, for instance, for ceramic fibers, if you ever see a 350 plus, sell. It makes a lot of sense. For the other stuff that's more expensive, like especially the metamaterials, which is what I'm actually invested in, I think patience is actually what we need there. And let's see if there is an impact on Tech2 ships next at 30 minutes. So I personally would have thought that maybe speculation would have started to really bring prices back up here as well and increase volatility, but so far that has not been the case, and so perhaps the logic just continues that the more complex, the more expensive, well, the more there's been time to create big backlogs and big reserves of these items. That is actually now contributing to stability at lower prices than what you would expect. So let's see if that trend is continuing. Here is the Basilisk. Well, Basilisk here slowly going back up, and this is definitely the highest price point for the last 4.5 months at 138.5 million for the sellers, 120 for the buyers. So not yet, but this is a first little second wave that's actually higher than the previous one. So first sign that perhaps it is starting, but let's continue down the list. Here is Cerberus. Well, actually same thing, right? Second wave, and here we actually have a data point that went up to well above 150 million, 160. We are down to 142 to 131, so it's still just a very shallow little wave. It doesn't really represent that much of a trade opportunity, but it's for me good news, as this might be the start of something. Next here we've got the Curse that actually had a full recovery at 200 million that was then absorbed and is actually coming back down. So that's the bad news. The bad news, 144 million for the sellers. Buyers are below 130 million. So basically have another chance to jump in on the Curse at the moment below 130 million. I have a couple Curses already. So if you haven't though, here is your, in my opinion, buy opportunity, and probably one of your maybe latest or last ones, but it could be with enough volatility and enough ships, you know, driving that when everyone becomes stingy, so you get a price spike like this, but then, ooh, I gotta sell, too many people sell with their speculation curses, so you get an opportunity like this. That's basically what I'm hoping for. So yeah, you can jump in on the curse, I think, at this point, and I believe that you will have a nice sell opportunity later down the line. The Damnation, the bigger you go, I think the harder it's going to be for all of that to materialize, but also this one basically recovered from a 250 to 300 million range in short order after all these changes, 310 now to 282. And then if we go the other side, the smaller ships, it's taking its time, but here we go. It's back at 15 million for the Deacon, 16 in fact for the sellers, 14 for the buyers. So a bit of action happening on both sides there. Next we've got the Eagle, that big volumes, but unfortunately if this had gone to 150 it would have been a really good sign, but it's still just 126.5 for the sellers, 115 for the buyers. So this is another one. If 150 being traded in a day can be absorbed by the market, that is clearly a sign that there's just a lot of the Tech2 ships out there that are keeping things stable and perhaps too cheap for current production prices as well. Although, well, you gotta go through the whole chain, and it's not the whole chain that has fully recovered to the prices from a year ago. So I think, yeah, maybe we will need more patience. But if there's anyone where we could see those violent swings that can give us trade potential, I think it is this Tech2 ship market. The EOS here back down a bit, 279 for the sellers, 262 for the buyers. Maybe a little bit less interest considering the volumes. But as I've said, I feel like it's gonna be the more risky trades are done in the larger ships. So you can see this as a jumping point, and maybe you know, a couple of big buys like 20-30 ships can give you that sell opportunity, but I think you'll have more consistent and faster results in the smaller ship markets. Next here we've got the Aries, and that's not bad, a small wave as well. We were below 40 million ISK here. We're now at 44 million for the sellers, 37 still for the buyers. Buyers are very hesitant to go back up, which is actually kind of normal, because they know, if they know that there's all these ships out there, this can get squashed very quickly. But yeah, 36 to 44, definitely a bit of a trade potentially there. Flycatcher surprisingly stable for, in my opinion, such a cool ship with decent volumes as well. 43 million to 38.4 million. You're buying them below 40 million. Is that a good jumping point? I would say maybe, still a possibility. Then we've got the Guardian, another one that gives me a little bit of hope. You can clearly see here things changed. We jumped up to 140. We managed to touch 110 again, jump up to 140 again, and we are coming back down. So 120 for the sellers, first seller 130, next year 135. So you can see it doesn't take all that much to get us back close to 140, and buyers are forced up to 120 at this point as well. But the pressure is here at the moment, and so if this had touched 150 would be great, but that's still not happening. Next here is the Heretic, also absorbed its price spike to 50 million, not willing to go down to the 30s, yeah, 34, 39. So it is, again, sometimes, for instance, for the curse, it is possible that this is one of your lost opportunities to jump in on some of these potential trades. Next here is the Hound, and that's, I would say, good news, although it started to front run things a little bit by having a spike here in October up to 25 million, a spike in November up to 25 million. We're all trying right now. Hound coming in at 24 million for the sellers, 20 million for the buyers, and not long after these price spikes you had opportunities to jump in at below 15 million. So that is the trades that I am personally now looking for. Unfortunately, it's really good news, I think, that it's happening here in the Hound. That quiet December, though, through all these changes, that's not what I expected. I thought that we would start to see some real jitters here as well, but it is starting here and there. So we get the Ichthyorsa next for the Triglavian stuff. A little bit of pressure on this one, but clearly away from the bottoms as well. So 553 to 516. I would say here it's that same story, right? You can make ISK trying to trade these price spikes, but they are far fewer and in between. Although a single successful trade, of course, if you jump in at, what's this price right here? Let's see if we can get something like that, 440. And then you can sell close to, that's probably going to be a 600 million plus, yeah, 580. So that's very big for a single trade, but they're few and far between. Whereas the Hounds, well, here is that more consistent potential within a smaller ship market. Next here we've got the Ishtar landing on 150 or going just below that. Yeah, just below that for the sellers, 138 for the buyers. Then we've got the Kirin, still very stable. Are buyers above 15 though? Nope, 1430, 350. So this is not a stealth bomber. I think stealth bombers have that highest potential for the volatility. This is a logistics frigate, but this is still one that's very, very cheap, that basically hasn't budged for a couple of months despite all of the changes to the production chains. Then we get the Manticore. That to me is interesting as well. We're getting close to that 15 million. Buyers are just above that, 17.5. You can see the supply problems. That's also starting to dry out. So all of these orders are getting older and older. There's still fewer and fewer people. So this is basically your last chance to jump in close to 15 million for the Manticore. And then if the Hound is any indication, well, we might see some volatility. We had a spike here in November as well. Nemesis, same November spike right here. Unfortunately, no jumping opportunities anymore, stuck in the 16 to less than 15 million mark. So that's a choice you have to make. Do you consider a Nemesis below 15 million an opportunity? Well, if it jumps to 20 or 25 like the Hound, it is. And I would actually say, if you're like me, you're expecting more volatility or you're hoping for more volatility, that is the risk to take, of course, to jump in now on the Manticore and the Nemesis. Next here we've got the Nighthawk, so actually a command ship that shows a little bit more volatility as well. Look at that here, 250, 350, come down to 250, and we are currently selling at 320 million ISK. That's actually tradable in the last couple of months. But then, of course, the other downside, the Hound trades at almost 250 on a couple of days, so 100 chips is definitely possible, whereas the Nighthawk has high points of around 25. So it's a little bit harder again to trade in this one. Next, we've got the Oneros, and very good news. A logistics cruiser. I love these as well. 1 year high point. So this one is now going for 188 million, 148 for the buyers if you have an Oneros. And I think across this here, I mentioned quite often that I would never hold more than one, really. But I think jumping in on an Oneros below 100 million, that was like a little bit too good not to at least have one lying around. And here is your sell opportunity. Nice, cool 80% profit potentially right now for the Oneros trade. Then we get a Purifier. More good news. Look at that. Jumping up to close to 25 million as well. So you could have bought these below 15 million. Yeah, right here. Up to late December, and we're now at 24 million for the sellers, 17 million for the buyers. They have to budge here as well. The interesting thing again is going to be how quickly and how sharply will supply drop this off. Then we've got the Rook also going back up a little bit, 162, not exactly a bigger wave or anything like that, but it is moving up. Then we get the Saber landing on that 35 million yet again, 35 for the sellers, just below 35 for the buyers. You're basically buying a Saber at 35 million, considering the whole picture before. Yeah, this is another one. I mean, it is the interdictors. It's a little bit harder than stealth bombers, but it is definitely, I think, the next step up. So that's a buy opportunity for the Saber, buy opportunity for the Nemesis, I think, for the Manticore as well. Yeah, looking like there is the start of potentially trading Take 2 ships, I think, is starting to show up. Then the Scalpel had this one jump up here as well. Probably a 25 million sell was possible. We are back down to 18 million, 15 for the buyers. Again, we have to start making more difficult choices here. Scimitar still not doing too much, 121 to 111. Sleipnir, yeah, 300 plus pretty easily, 320 to 290. So buyers below 300 on that one. And then the Vagabond had a spike up to 180, which might be overshot a little bit. Less than 150 now for the sellers, below 140 for the buyers as well. Let's get a 140 to show up on the chart. So below 140, that's definitely not bad. Yeah, Vagabond, try to get one as close as possible to 140. If we can keep getting this type of volatility, that's definitely pretty interesting. And finally, the Zarmast. Yeah, the more risky bets, because only around 10 a day can be traded close to the high points. But even here, right, if you bought for 400 million, and especially here below 400 million, not that long ago you could have traded these for 600 million. That's not only a 50% profit, but that's 200 million. And we are coming back down from that, but the 400 not coming, well, actually, yeah, coming into play for those buyers. 509, 362. So you can try on this type of a chart, in my opinion, a buy order that's indicated by these minimum maximum prices. So for Take 2, all right, I'm seeing more and more signs that volatility might be back on the menu. Let's take a look at Take 3 next, coming in at 42.55. There we go. As always, we start with the Destroyers, and the Confessor are opening up a little bit of spread here and starting to go up in price as well. 51 for the sellers, 43 for the buyers on not enough supply. So that's interesting. First time that I would say we are starting to see a supply-demand imbalance. That's quite structural. There's clearly not enough Confessors on the market to keep us below 50. And so this price is going back up. Averages though still below that, so it's on both sides that these ships are still being traded. Hecate are at 54 million, 48 for the buyers. Now this is a lot of ships, but the new supply is definitely not high either. And again, a bit of spread between min-max prices that is starting to open up here as well. And then we've got the Jackdaw that actually had the most volatile spike for the last 4 months or so as well, jumping up to 55 million, back down to 52, 48 for the buyers. So that's definitely not a great place to be trading, but here again, bit more spread potentially opening up. And then finally we get this Zweipel that unfortunately really pins everything down, 45 to 41.5 million, and the spread just hasn't moved for several months. But it is definitely interesting that we see a little bit of a lack of supply starts to open up spreads between sellers and buyers. Is this potentially changing the market and meaning that we can start to look into this one for trading? I personally don't think so. I think what's more likely to happen here is that gas needs to go to all of that other faction action that's happening at the moment. That is drying up supply. It could, as it is doing now, open up a spread that becomes tradable, but I basically expect that eventually buyers are just going to capitulate and are going to close that gap again, and we're just going to be in a higher price ranges on even lower supply because there's even more demand for gas stuff in the faction markets. Next we've got the cruisers. Here is the Legion. So while we were at a 200 million sell opportunity, we are starting to come back down. We're not willing to just dive down to the 180 for the buyers just yet, 200 to 184. So I think we need a bit more patience on that one. For the Loki though, you can see the volatility very clearly here, well above 200 million sell opportunity. And just a couple days ago, you could have bought these below 180 yet again. 190 to 180 now. Bit of a harder choice to make. Is a 180 jumping point or just above that what you want to do, or do you want to wait for, well, this period here, here again, or here a couple of occasions? That is the choice that you have to make, of course, if you want to trade in Tech 3. But yeah, if you want to trade in Tech 3, I think these types of charts, for instance for the Loki, is what you want. You've got periods where it's the sellers that completely dominate the price, 230, you get a sale, and here now you get that spread opening up, which on the right side, on the left side I should say, of that 5-day moving average, you have a good opportunity to actually grab one close to 180 million. So probably just too late here, but this is actually tradable. Then we get the Proteus that in my opinion is stuck a little bit high, so basically making another sell opportunity here, 228 for the sellers, 206 for the buyers. And finally we get the Tengu that is also showing some signs of fatigue here, while the average of 200 million is not defendable, 194 to 182 still for the buyers. I would say patience for the Legion and the Tengu. The Loki, more difficult choice. Could be still okay to try a buy order on this one, but this is, in my opinion, where the Tech 3 trade action is. It's going to be in the cruisers, still not in the destroyers. And then finally the extra products for the week. I choose the faction cruisers this time, 47.15. Let's take a look at that. So we get ships, cruisers, faction cruisers, and we start with the pirate faction cruisers. So I think here again that's part of that Tech 3 destroyer market. We are in a very expensive cruiser market. Why? Well, we get new faction ships including dreadnoughts. All of that stuff requires that gas and those bottlenecks there as well, and so with everything being very expensive, there is just less room for supply of the, well, least, in my opinion, smallest value proposition at the moment, which are the tactical destroyers compared to Tech 2. So the Ashimu is going for almost 200 million ISK. Not a lot of buyers out there at 166, but clearly very expensive at the moment. Cinnabal is, well, a little bit less expensive, but trending upwards above 250. Yeah, 264 at the moment. Then the Ortrus actually coming down from a peak, a one-year high point peak at 450 in December. I would say probably event related on this one. So it's still 400 million for a cruiser hull. Then we get the Phantasm that has a very bad chart here. Late December spike, but still at 250 is actually a little bit cheaper than a lot of the others. Stradios, I'm definitely interested in this one. Starts here at 400 million, has found a new range of 300 million, is a little bit above average, I would say, at the moment at 320 for the sellers. Then the Gila, one of my favorite ships, actually very expensive at the moment at 330. And then finally the Vigilant, probably very low volumes on that, also 300 million plus. So on the 1 year chart, they're not all expensive, but if you look at that tail end here and since December, clearly more expensive, clearly more expensive. Stradios, yeah, more expensive as well here since mid-December. Our exception is going to be the Phantasm. That one is actually a little bit less, but then the Ortras had a couple spikes with events and is still very expensive here. Then we get the Cinnaball also up, and then the Ashmu as well. I would say this is just part of the full faction ship story that's just gobbling up huge amounts of resources as well. Stormbringer, same story, right? Expansion, here's the more expensive part of that one. Augurer Navy issue, actually an expansion spike in production, so lots of action, maybe even lots of LP. And settling above 50 million ISK, I would say not that expensive, 55 to 50 million. Then we've got the Caracal, same story here, big hype and very expensive with the launch of the expansion, but then landing on 50 million, maybe a little bit less action indeed after a couple months into the expansion. Executor Navy issue though, look at the general volumes, they have gone up substantially, and so here that again is all of that demand for the raw materials. Here it's very noticeable. So availability for the blueprints or something must have gone up substantially, 51 to 49. Omen Navy issue, all right, actually not that noticeable. So we do have the expansion spike, but that has been fully absorbed, and volume wise it's not even that crazy. Osprey Navy issue, here's the expansion bump. The volume bump, it's there, it's not as noticeable, and actually fully absorbed as well to 50 million. Side fleet issue, 50 million, higher volumes. Stabber fleet issue, cheaper one, below 50 million. That's actually really low. 48 million for the sellers, below 45 million for the buyers. If you want to gamble in faction cruisers, I would say buy a couple of Stabber fleet issues and then hope that things can actually get violent again. With the changes to faction warfare in Q1. That would be my gamble to take. Vexor Navy issue landing on 50. So we clearly also have a harmonization of the price ranges for these Navy faction cruisers around that 50 million mark. We got a couple of exceptions like the Stabber fleet issue that's actually become even cheaper, but volumes have gone up, availability has gone up, and for the faction cruisers, price has actually gone down for a couple of them, but all of that increased volume means more resources, and so the price is being paid right here in the price of the pirate faction cruisers and in the volumes of the Tech 3 destroyers. It's truly all interconnected. I think it's absolutely fascinating, and it's going to be interesting to see again what Q1, if CCP can come out with those changes as well to open up faction warfare basically to anyone whenever they want. That would be very interesting as well. So there we go, guys. That is this EVE talk. Thank you very much for watching, and as always, I'll see you next time.